Hi guys. Today we will analyze BHP Group stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is an average performer in the overall market. Both the short-term and long-term trends are positive. Support levels are around $77 and $67. The next support levels are around $63.60 and $53.50. Resistance level is around $81. In the last month the stock has been trading between $62.30 and $79.60 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 4.7 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently near all-time highs. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 16% per year, for last 5 years. We see that the average profit margin of the stock has been around 19% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 150% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for BHP Group: bad, average, and good. First scenario. BHP Group will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, -4%. Future profit margin would be low, 16%. Future free cash flow to net income rate would be low, 110%. In this case, the fair value of the stock today would be $75. Second scenario. BHP Group will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, -2%. Future profit margin would be average, 18%. Future free cash flow to net income rate would be average, 130%. In this case, the fair value of the stock today would be $105. Third scenario. BHP Group will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 0%. Future profit margin would be high, 20%. Future free cash flow to net income rate would be high, 150%. In this case, the fair value of the stock today would be $143. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.65. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For BHP Group, analysts forecast growth rate around -9% per year in next 5 years, and future P/E around 12. Again, I will use 3 different scenarios for BHP Group: bad, average, and good. First scenario. BHP Group will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, -4%. Future P/E would be low, 12. In this case, the fair value of the stock today would be $23. Second scenario. BHP Group will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, -2%. Future PE would be average, 16. In this case, the fair value of the stock today would be $38. Third scenario. BHP Group will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 0%. Future PE would be high, 20. In this case, the fair value of the stock today would be $56. As you can see, today the stock is overvalued, $77, even if we expect the company's high performance in future. The fundamentals are good. But there are signs of a wider economic slowdown in both the US and China. Based on estimates for the next 5 years, the company will show a negative growth in revenue, -9% on average per year. This is not good. Also, the stock is currently near all-time highs. So, it's risky to buy the stock at current levels in my opinion. It's a highly cyclical stock. In times of rising interest rates, cyclical stocks perform poorly. I will definitely not buy it in 2022. Company strengths. BHP Group is one of the world's largest producers of major commodities, including iron ore, metallurgical coal, and copper. It also has substantial interests in conventional and unconventional oil and gas, and thermal coal. The company is based in Australia and reports results in US dollars. BHP shares are listed on the New York Stock Exchange in the form of American Depositary Receipts. BHP's iron ore assets are industry-leading. The company remains well placed to continue low-cost production and increase output with minimal expenditure and an efficiency focus. The company's long-term fundamentals remain strong, and the company will benefit from global economic growth and higher prices for metals and other commodities as the pandemic recedes. The balance sheet is solid and the dividend yield of about 9% is attractive. BHP's return on assets of 20% and return on equity of 41% are amongst the best returns of the industry. Its profit margin of 23% is amongst the best returns of the industry. Risks. The greatest risk for BHP investors is the cyclicality of the company's business, as economic downturns can sharply lower demand and pricing for iron ore, copper, and other commodities. In times of rising interest rates, cyclical stocks perform poorly. The company is global. It could face growing sovereign risk as governments under fiscal pressure look to plug budgetary holes by taxing the industry. BHP is being viewed as a high-yielding income stock, but resource companies can often be unreliable dividend payers. 84% of the earnings are spent on the dividend by BHP. This is not a very sustainable payout ratio. Keep an eye on it. Management's target payout ratio is 75% of underlying earnings in the next 3 years. The China boom will never recur, and commodities are at the beginning of a long, slow secular decline. Based on estimates for the next 5 years, the company will show a negative growth in revenue. The revenue will decrease by -9% on average per year. In the coming 5 years, the earnings per share will decrease by -8% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.